Hey guys, so in this video I will be going over Apple's recent announcement of the iPhone 8, iPhone 10, and an upgrade to the Apple Watch, as well as doing a brief analysis of Apple stock. So starting right off with the iPhone 8, this is the video that Apple used to announce it in their most recent presentation, and they claim that the iPhone 8 features the most durable glass ever in a smartphone, that it's water and dust resistant. They improved the speakers, making them 25% louder than the iPhone 7. They upgraded the chip on the iPhone. They upgraded the camera and allowed for new portrait lighting. They also calibrated the cameras for augmented reality. And it also has wireless charging, and it starts at $700. Now on to the iPhone 10, which has all of the features of the iPhone 8, plus an edge-to-edge display, no home button, and it has a Face ID, which allows you to unlock your phone using your face, and it starts out at $1,000, making it Apple's most expensive iPhone ever. Apple also announced an upgrade to the Apple Watch, which will allow it to function without your phone, so you'll be able to get a cell signal from your watch, which is great because in the past I have not wanted to buy a watch because I really thought it had no purpose because I needed to have my phone with me if I were going to use the watch. This is slightly older news, but Apple is also planning to invest $1 billion in 2018 on developing their own content, and I think that this is a great thing for Apple to be doing. They can really use this content to offer another thing to their customers, and it will be another revenue stream, and I always like to see Apple adding new revenue streams so that they're not as dependent on the iPhone, so this will be great. I could see them rolling this in with their services segment and help continue to grow their services segment, so this would be great to see. I'm definitely happy with their plan to invest on content, and it'll be nice to see that they are going to be putting some of their $261 billion in cash to work on content. So in general, that is also another great thing that I'm excited to see what Apple will do with. So in general, I'm very happy with the new product announcements from Apple. I'm especially happy about the watch because I really think that allowing the watch to get cell service on its own will boost sales significantly. Like I said, I would not have bought one in the past, but I will definitely consider buying one now. So I think that this is the best thing that they did with their new announcement. I also really like the addition of a higher price point iPhone. It allows them to test the waters with a $1,000 to $1,200 iPhone to see if people are still willing to buy it. And I do think there will be people who are willing to buy it. I'm going to assume that this will be a higher margin phone, so that will be great. They also have the iPhone 8, which is similar in price range to their past phones, so the people who aren't willing to move up to that higher price point phone will still be able to get an iPhone. So I'm definitely a fan of that. I think they added a lot of cool new features to the iPhones, and those will get people to upgrade their phones. So in general, I'm very happy with the new products that they announced, and now I'm going to talk about Apple in general and what I think of the stock. Apple has a rock-solid balance sheet with $261 billion in cash. This means that they will be able to pretty much buy anything that they want in the near future, and they will have absolutely no problems with finances anytime soon. I think they're definitely a very safe company. It would take a lot of mismanagement for them to squander $251 billion in cash. So that makes me feel like they are definitely a safe company, and that if they see an opportunity where they need a lot of cash to purchase a company or fund something new, they will have no problem coming up with this money. They are also generating significant cash flows. In the 9 months ended July of 2017, they generated almost $48 billion in cash from their operating activities. So they really are a cash generating machine, and they have a ton of cash already. So I think they're definitely in a great financial position right now. Now for a look at the growth from their most recent quarter. All segments of their business grew. Their iPhone segment is the biggest segment of their business with a revenue of around $25 billion, and this was up 3%. iPads had a revenue of $5 billion, that was up 2%. Macs had a revenue of $5.6 billion, which is up 7%. And services had a revenue of $7.3 billion, which was up 22%, and other products had a revenue of $2.7 billion, which was up 23%. The best thing that I see here is the massive increase in their services revenue. I'm super impressed by this. I think it's definitely great that they are starting to get more revenue from things other than iPhones. I would not like to be invested in them as much if they were just a company that generated all of their revenue from iPhones, because if there is a problem with the iPhones, then that would definitely be bad for Apple. And now that they're starting to move into services while still growing their iPhone segment, I think it makes them safer because they are more diversified. And so I'm hoping that they can continue to grow their services segment like they have been recently. So all in all, their most recent quarter was absolutely tremendous. Here is a chart of Apple's price to earnings ratio over the last 10 years. Their current price to earnings ratio is 18, with a historical average price to earnings ratio of 17.1, and that is over the last 10 years, like I said. And so if you look from 2010 to present, they've really been trading between a 10 and 20 price to earnings. So an 18 price to earnings is sort of at the top of their recent range of price to earnings. And this does make sense because the market is trading at an elevated price to earnings, but I don't love Apple's valuation as much as I loved it, say, 14 or 15 months ago when they were trading at a 10 price to earnings. I did manage to buy some Apple around 10 months ago. I also bought some Apple in 2012, and I'm still holding on to all of that. It is currently my largest holding, but I'm not jumping on buying any more right now just because I don't love the valuation as much as I did in the past. If you look at Apple's forward price to earnings, it is currently a 15.1, which is also a lot cheaper than the market. So if you look at Apple compared to the market, it's definitely cheaper. If you look at Apple compared to its past, it's not quite as cheap. So I do think that Apple is decent in terms of valuation. If you don't own any Apple stock, I mean, it's a great company to buy and hold. So it would always be worth maybe buying a little bit, but I wouldn't be jumping on buying any. It's not like it was 15 months ago where I was jumping on buying some. So I'm not rating it like a strong buy or anything. I think it's sort of between a buy and a hold right now. Apple is also operating very efficiently. They have grown their revenue over the last 3 years at an average rate of 8.1%. Their net income over the last 3 years at an average rate of 7.3%. They also have great operating margins at 26.8% and a very solid net margin at almost 21%. So this really means that they are bringing in a lot of money from the revenue that they have. They also have great return on assets and return on equity, which means that they're being very efficiently managed. So all of this is great to see. And it just really shows how well Apple is doing as a company and how well they are being managed. And finally, if we look at Apple's dividend, they have a low payout ratio at around 25%, and they have been growing their dividend at around 10% per year since 2014. So this is great to see. Their dividend is not too high where it is starting to strain the company, and they're still able to grow their dividend quite a bit. These are things that I like to see. A company that can raise its dividend by a lot while still maintaining a low payout ratio is definitely nice to see. And so I think the dividend is great currently. So all in all, I'm a fan of Apple's new products. I think that they will definitely help to grow Apple's earnings and revenue. I'm also a fan of the major growth that we have been seeing from their services segment. The Apple AirPods have also been very successful, which are the new headphones that you use with the iPhones because they don't have a headphone jack. So I think that all in all, Apple has done a great job recently. And that they will continue to do a great job. In terms of valuation, it is definitely cheaper than the overall market, but it is a bit expensive compared to Apple in the past, so I am not jumping on buying any right now. However, if you don't own any Apple, it is always worth looking into. If you do own Apple, I would likely wait until you can see a better valuation, hopefully sometime in the near future. If there is a market correction, since Apple is owned by a lot of the large ETFs, that would definitely have an effect on Apple's stock price. So that could be a good time to get in and buy some Apple when it is cheaper, but you never know. So all in all, I think Apple's a good company. I would rate it between a buy and a hold, like I said. So thank you guys for watching. If you enjoyed this video, leave a like down below and consider subscribing. And leave a comment on your opinions on Apple. I would love to know what your guys' thoughts are. Have a great day.